everyone. Thank you for joining us for HCL Tech's third quarter. Happy New Year to all of you from the entire HCL Tech family. Good evening, everyone. Thank you for joining us for HCL Tech's third quarter earnings announcement. First of all, Happy New Year to all of you from the entire HCL Tech family. Let me start with the quarterly performance. I'm very happy to share that we've delivered a strong performance across all metrics: revenue growth, improving margins, booking growth, and the people metrics. Our revenues grew 5% in constant currency, quarter on quarter, and 13.1% year on year, again in constant currency. The strong revenue growth is attributed to both the momentum in our services business as well as our HCL software business. Our services business grew 15.4% year on year and 2.2% sequentially in constant currency. We posted an improved EBIT of 19.6%, driven by improvements in our services business and a huge uptick coming in from the seasonal gains that we have in the software business. Overall, we are continuing to see a good demand environment, especially deals which are IT operating model changes is a very important theme, and we are seeing significant traction there. Cloud adoption is another theme on which we are seeing some good traction. And the third element is vendor consolidation. We see there is a significant amount of opportunities and wins that we've had on the vendor consolidation. So vendor consolidation, cost optimization, and integrated opportunities will drive the growth in the near to midterm. We also enjoy a very unique position as the only service provider to be in the leaders quadrant in the 6 magic quadrants of Gartner. We are the only provider, and we are very, very proud of this recognition. And this recognition is also reflected in the good bookings that we've had. We had a very strong booking. I'll talk about it in a few minutes. Our software business delivered an outstanding performance. It grew 30.5% quarter on quarter in constant currency. They also scaled up impressively this quarter, and they won 26 new SaaS deals. SaaS conversion is one of the opportunities and strategies that we've been pursuing, and we had some very good success there. From services perspective, our engineering and R&D services business led the growth with a 2.5% sequential growth, constant currency. And IT and business services grew 2.1% sequentially, again in constant currency. This growth came up despite furloughs that were higher than anticipated at the start of the quarter and higher than what we saw in the previous year. In terms of our software business, we signed 7 new clients, Fortune 500 and Global 500 clients, and Global 2000 customers in the last quarter. We already have 25% of the G2000 companies as our clients for the software business. And we continue to see a synergy between our software and services business in a number of clients. HCL Software announced a multi-year partnership with the legendary Formula One team, Scuderia Ferrari. Ferrari's become a strategic partner for HCL Software and really focus on supplying high performance precision technology for the F1 team. So you will see HCL Software logo was very visibly present in the recent Formula One season. We continue to kind of leverage our partnership with the New York Jets and Giants, for whom we are the digital transformation partner. So it continues to be a good uptick for us. Now coming on to the verticals and geographies, Europe led the growth with a very strong 7.2% sequential growth, followed by Americas at 0.5% quarter on quarter in constant currency. And our top performing verticals were life sciences and healthcare, manufacturing, telecom and media, delivering sequential growths of 5.5, 4.9 and 4.5% in constant currency sequentially. From a booking perspective, our bookings were $2.35 billion. It grew 1.9% from an ACV perspective and 10% on a TCV perspective on a year-on-year basis. We won 17 large deals across services and products. In services, we had a very significant win, greater than $500 million deal for a US headquartered Fortune 300 financial services company. They selected HCL Tech to modernize their IT landscape, leveraging cloud along with Amazon Web Services. HCL Tech will enable a seamless migration to the integrated solution, leveraging the cloud platform, driven by automation and the migration process. We also announced a deal with ODP, which is Office Depot Corporation, a leading provider of product, services, and technology. They selected HCL Tech as a primary IT partner for their digital transformation and all IT operations. We also announced a deal with a leading company in the US, a toy manufacturing company. This is a stellar deal, which is vendor consolidation, and it's really pivoting them from a traditional operating model to a product IT operating model, which we just announced. We also made good additions to our client pyramid. We had 3 additions to the $50 million clients and 2 to the $20 million category. Our pipeline continues to be healthy and well distributed across large and medium-sized opportunities. In terms of people, Ram will provide a little more color on the people, but we had a very healthy net addition of about 3,000 people. In terms of ESG, one of our medium-term objectives is to weave ESG into our business strategy. We launched HCL Tech Sustainability School and the first comprehensive climate literacy learning program across 219,000 people last quarter. This helps our teams to understand the impact of climate and what they can do in their own lives and as a part of the organization to make the planet a better place to live. In terms of looking ahead, we believe there is a near-term impact to a few industries like technology industry as they optimize. This will continue. While there will be a little bit of optimization, we believe in the near to mid-term, it will really be a good growth opportunity for us, especially with the right propositions. In this context, our propositions, global delivery, talent, new capabilities will continue to give us an edge in the mid to long term. I must remind you that Q4 is a seasonally weak quarter for us as our P&P performance peaks in Q3, so you will see a dip in Q4. So looking ahead, we remain very positive of the medium-term growth, and really our confidence in the growth is really coming from good bookings and pipeline across every segment. So with that, I will hand over to Prateek to provide more details.
Thank you, CVK. So, as I look at the report card, I can only summarize it one way. It's a quarter of 19s, right? It's like 19.6% growth year on year in rupee terms, and it's 19% profit after tax growth as well. So it's like very well balanced. Whatever growth we've achieved at the top line has translated into equal growth at the bottom line. It's also a quarter of milestones because for the very first time ever, we've crossed 5,000 crores of EBIT in one quarter and 4,000 crores of profit after tax. So that's how I would summarize it. Going back to the typical numbers, the revenue for the quarter came in at 26,700 crores, round number, which is the 19.6% growth on the year. And that's on the back of a 22% year-on-year growth in the services business. That is what has driven that 19.6. And In constant currency, the growth was 13.1%, because obviously rupee depreciated, it gave us that extra 6.5%. And that also was driven by 15.4% in constant currency in services. So clearly that has been the driving factor. As far as the quarter is concerned, on a sequential basis, it grew 5%. That was largely driven by, the big contribution of 30% plus came from the software business in constant currency. And services also reported a good 2.2% in a seasonally softer quarter, that is December. Profit was, EBITDA came in at close to 24%, 23.9 to be precise. EBIT at 19.6%. That was again a 165 basis points improvement versus the previous quarter. Previous quarter was 18%, 19.6 this quarter. Again led by software flow-through margins. And the profit after tax came in at 15.3% of revenue, which is up 117 basis points. Return on invested capital, which is a key metric that most people track. We are at a company level, we are at 30% ROIC. And in the services business, that number is 37.4% actually. So I think a very satisfying quarter from all perspectives, growth or profitability or ROIC for that matter. And the guidance, we have narrowed down the guidance. We have given 3 points. So the overall growth guidance, we've kept it at 13.5 to 14%. The services growth is higher than that. It is 16 to 16.5%. And margin guidance, again, we have narrowed it to 18 to 18.5%. This quarter, like in previous quarters, also saw good cash generation. Cash in the last 12 months, operating cash flow is at $2.04 billion, which is close to 16,000 crores. And FCF is at $1.8 billion, which is 14,270 crores for the last 12 months, which is at 111%. OCF is at 111% of the profit after tax, and free cash flow is virtually equal to the PAT at 100%. The balance sheet remains strong with the gross cash at just under 20,500 crores and net cash at 16,150 odd crores, which is close to 2 billion. 1.95 billion to be precise is the net cash in the balance sheet. With the profits this quarter, the last 12 months diluted EPS stacks up to 53.36 rupees, which is a 4.8% sequential growth and 13.1% year-on-year growth, which is in line with the constant currency growth of the whole company. And the dividend declared is carrying on the 10 rupees per quarter per share. That has been declared by the board for this quarter as well. And the record date is 20th January. Payment of the same will be 1st February. With that, I'll pass it on to Ram for the HR update.
Thank you, Prateek. Good evening, everybody. One more good quarter. One more good quarter. Our people count has increased this quarter again to end at 222,270. That's an increase from the previous quarter of 2,945. So that's a good growth for this quarter. Another very good update is on the attrition. That's been an area of attention for a period of time. After 3 or 4 quarters of increase in attrition, we have seen a significant drop in attrition. Attrition for this quarter ended at 21.7%. That's a 210 BPS drop from what we reported in the previous quarter. The quarterly trend on attrition is quite positive. There's a significant drop in the quarterly attrition. So that indicates that the attrition trend line will look encouraging going forward in the quarters ahead as well. So that's a brief update that I wanted to give. We can move into Q&A.
The floor is open for questions. I'll move the mic around. Anybody?
Your mic is not. Good evening.
Yeah, so I think just a couple of queries. The numbers are very strong, and yet there is you have narrowed down your margin, the guidance margin. So just want to understand what is it that is driving this this reduction, and I think specifically for Ram, I have a few queries. If you could help us understand, what are the things that help bring down employee costs. I saw that the share of employee costs has gone down, and within this also, because the number of freshers you've added, it is around 20,000 I believe for the year so far. Just want to understand if we are still on target for the 30,000 odd freshers that we were planning to onboard this year, and also if you could give us some visibility on the variable pay for the quarter.
You want to do the revenue projection?
So, I didn't catch your names, Romita, right. So, Romita, we had given a guidance, we had increased our guidance substantially last quarter. If you remember, from 12 to 14%, we took it all the way to 13.5 to 14.5, right? That was in October. And a lot of things changed in those 2 months of October, November, when all the tech majors and pretty much all the companies around the world came out with their results. So that was the reason on December 8th, when we did our US Investor Day, we did talk about being towards the end of the lower end of the guidance range. And that is what we have basically reiterated. So it's nothing that we have brought down compared to the December 8th or 9th, what we said. It's basically the same thing. Yes, if you compare versus the previous quarter, it is lower, because lower meaning it's the same range, it's just the bottom half of the range.
So are there any specific areas that you want to call out, areas of concern?
No, not area of concern, but Q4 is seasonally again a weak quarter for the software business. So software has peaked, and you will see a drop in software business in Q4. So that pretty much kind of brings down the growth in Q4. So that's really the numbers.
It's seasonality, nothing.
And maybe you want to add the employee cost, and then Ram can address the.
Yeah, okay, yeah. So employee cost is a factor of 2-3 things.